It is, of course, our weekly market analysis webinar, but I'm going to jump straight through to the LCG charting platform. So this is short term on the euro, but let's jump out for a second, just remember where we are. So this being our weekly candlestick chart, I want to point out to the kind of two main things that I'm watching here. One is we put in this big swing low, obviously came up, retested the highs, we've come back, and we've pretty much held the lows, barring this false breakout about a month ago. So by and large, we're range bound in the euro dollar, and the same thing for the DXY, the dollar index. Dollar index trying to break out higher, euro trying to break out lower from this fairly wide sideways range. Now on the short term, it looks like at the moment, so we had this false break, that is bullish, but the trend is bearish. So we're sort of neutral here. But since the false breakout, we had another one, and we're sort of creeping higher. Not too much to be made from this, but just in the short term at least, it does seem like momentum is a little bit more to the top side. And something that I've been looking at here is just that we do have something of a trend line here with one false break, call that the high, call that the one. So almost four, and then a few false breaks here, touches on a trend line and a break higher. And we've made a series of successive higher highs here, and this trend line going through the peaks appears to be part of what's caused this pullback, but I wouldn't put too much weight on this. The only risk being that we don't in fact end the decline here at this broken declining trend line. In fact, we're forming more like a channel, perhaps something like this, where we drop right down to the lows again. Now that's probably, if with this trend line here gives way, probably the moving averages, then the rising trend line being the next area of support. But while we're above 113, 113.10, I've got this level drawn in at, then we're remaining, optimistic that actually the euro can hold the lows here. Another thing I didn't mention, but I do have it drawn in here, is that we've got some bullish divergence. So the price made a lower low with this false breakout. RSI made a higher low. So momentum a bit stronger than the actual price action. Sometimes the momentum can lead the price higher. So a couple of things suggesting that maybe we can hold this 113 level. Okay, moving swiftly over to the British pound. Obviously, it's all turning to turmoil a bit over in the UK. We were supposed to have the vote in Parliament tomorrow, but the latest news is that it's not fully confirmed yet, but various sources seem to be saying that the vote has now been cancelled, which is got to wonder why this didn't happen earlier. Theresa May was never going to get the support she needed to win this vote. She was hoping to bully everyone into it. Doesn't look like that tactics worked. So somewhat back to the drawing board here. It's hard to see what a delay in the vote really does, because it's unlikely people are going to really change their viewpoint unless something's renegotiated. But on the EU side, they're saying they don't want to renegotiate. So all a bit up in the air here, and hence sterling down at 18-month lows. But this is support, this 126.70, 127 being the round number, but 126.70 really kind of being the line in the sand here. We're below there. So at the moment, we're breaking lower. We've not had a daily confirmation below this level. So it's an intraday break lower, but it does look rather ominous. And so you can see the importance of this 126.70 here. This was obviously this was Brexit. This was the flash crash. We based out here with a roof around 126.70/127, broke out, retested, went all the way up, came right the way back down again, and now we're back down here again. It looks like it's going to give way. I personally thought that maybe 127 could hold. It still can, depending on the results here. It is a big level. So either way, there's trading opportunities. We look for a big bounce off the level, and we may have put in a bottom. The level gives way. We're opening up a new leg in the downtrend, and there should be a fair bit of momentum behind it. So certainly in the next few days, some good opportunities with cables should be opening up but obviously keep in mind the volatility is going to be pretty strong. So yeah, moving lower as we speak here. Difficult to, I don't know if we have anything confirmed yet. Okay, so it's been, I think it's been a confirmed. Well, we're just hearing sources saying definitely off, but we don't know quite how true that is. But we've got a speech from Theresa May at 3:30. So be careful being short now, because the speech could add some extra elements. That's 3:30 UK time, so 3 hours from now. All right, moving on. Enough of Brexit. The only other thing to quickly note here is that basically on the shorter term basis, this being our 4-hour chart, we were in a horizontal range up here with these two highs being respected, but actually at the moment it's more like a downsloping trend line through these. You can see we're making successively lower highs, just made a new lower low. So all fairly characteristic of a downtrend, but it's not to say we couldn't spike out the top of that range. And if we break above this rising trend line, still we're going to struggle up at 128.80, I think, but it will be a very positive sign, because that's really been the pattern, is this kind of downsloping flag pattern, or rectangle rather. Okay, moving swiftly on to dollar yen. So this being our 4-hour chart, we're basically pushing off the lows here, trying to make a double bottom. The weekly thing that we've been watching for a long time is the fact that 114.50 is a big level, but we're just looking to see whether this uptrend that's been going into the level, and the fact that we've been consolidating beneath 114.50 without any too dramatic declines, would suggest that we could break to the top side, but that obviously goes against the idea that the euro would be about to break out higher. If the euro is breaking out higher, you would expect dollar yen to break lower. Obviously, in a kind of generally risk-off environment where the equity markets are selling off, you expect the yen to do well. But it hasn't done overly well. It's been going sideways against the dollar. Obviously, the dollar in itself also a bit of a haven. So we're basically just we're stuck between this 20-week moving averages support, a rising support, and 114.50, and to some extent this declining trend line through these last 3 peaks here. So something of a sort of triangle pattern here. Given the fact we've been consolidating for a while, should be a decent breakout once it happens, but we're not quite there yet. At the moment, we're just weighing up whether to get involved buying off this support level. We've had a, we strongly finished down. We've rallied up into the moving average. This is really a sell the rip area, but we didn't make fresh lows. That's why it's not necessarily going to be just another leg down here, because this low didn't get taken out. So we've got something of a double bottom here, but we haven't really made a new high. Really, to have any confidence in buying this, what you want to see is kind of a push above that level up here, and then a pullback to a better value area to buy somewhere closer to this level. So bit of basically we don't, it's a downtrend still, and 114.50 is still holding on the top side, but we haven't made new lows, so it's a bit a bit of a hesitation about selling down at the 20-day moving average or 20 period on the 4-hour chart. Maybe we push a little bit higher first, potentially this resistance area up here, or just one of these highs get respected, then they sell off. So not much on dollar yen, to be honest, but we know where we are and know what we're looking for. FTSE 100, so all the indices are pretty major levels right now. So we had this rising trend line up here for a while. We broke it ages ago. We came up, retested it, had a massive sell-off last week, obviously, took out some pretty big levels in terms of these recent lows. So at the lowest, we took out the February decline. So we're the lowest in 2 years on the FTSE. But to kind of try and put this in a bit more context, don't often look at this, but this is the monthly chart. You can see that basically the levels that we're testing right now are pretty massive. This is the 2000 stock market peak. This is the 2007 stock market peak. And then we obviously jumbled around through it a bunch in 2015, made new highs. Then we had the general election, etc. And we pulled back. Well, we did since last year rally up to new record highs on the FTSE, and we're coming back and testing these previous market tops. So 600-700 is pretty much the line in the sand. It's somewhere between 600-700 and 600-900 is where we've been peaking out. This up here is more like 6,950, just shy of 7,000, and we're down here at 6,700. So we're bouncing off here at the moment. RSI also at the 40 level, which has held the most recent declines. So there's some justification for a bounce here, but just obviously the market looking quite soft. So we're sort of open to seeing some signs of a bottom in place, but we don't really have it yet, other than just one day where we closed off the lows and we did drop the following day. So at the moment, it's still very much a downtrend. We need to see, first we're keeping an eye on the big level. Then we're looking to see if we can take out any of these structure highs over here. So something in here, we really need to kind of come up through there and then pull down again to feel confident about maybe this is the bottom. At the moment, probably the default assumption would be that as we approach these previous lows, some like they have already, sellers are going to come back in, starting at the old lows and heading up towards the moving averages here. So downtrend on the short term still very much intact, but we've just banged into a massive multi-decade level of 600-700. So very much key to watch what happens with that. If we close the week below 600-700, I think it's I don't want to say game over, but we're probably heading down to 6,000 on the FTSE 100. Okay, so switching gears to Germany now. So the DAX. So we've talked for the last few weeks about the head and shoulders pattern. It's working out quite nicely as of last week, where we had that big global sell-off. We took out those two recent lows that we tried to rebound from. So trend very much down, and the target, as we've mentioned last few weeks, is lower than we currently are. We've only made really about half the moves you could expect from this pattern. Really, it's the pattern suggests a move back down to 10,000. We're around 10,600 at the moment, so potentially 600 points more downside. If we do get a little bit of a bounce over the next few days, then potentially an area to look at would be where these lows got taken out. Look for a bounce up, and that would be as we stand close to the 20-period moving average on the 4-hour chart, but basically 11-ish thousand. If I draw that level in, you can see it's somewhere near. It's basically the median of like where these two trend lines intersect, if you like. So a bounce up there would be to value, but obviously we've just taken out those levels. We might not even get there. At the moment, you can see that we're kind of, there was that spike low last week. You can see that little low there where people tried to buy the dip, but just didn't work. That's where we're potentially rolling over from here, but quite a big stop loss if you're putting your risk up here somewhere. So maybe if there is a bit more bounce to be had somewhere in this consolidation or up above where that trend line 11,000 is, these are areas where the market could sell back down from if we get there. Wall Street, another important, it's that rising trend line that we've been talking about. We've touched it 3 times. It's also just the horizontal level here, but I think the trend line is significant. Basically, we've hit into that low and we're picking off it a bit, but the trend line has given way. We haven't closed the week below there. We've managed to close the previous 2 weeks above it, but at the moment we're challenging it. So had a big sell-off over the last month, obviously. Sorry, over the last week. But there could be more downside to go here. Lower highs, challenging the big level underneath. A break lower, and we could see and the next leg lower in markets. And if we do, logically, we come down to test somewhere down here. So this was obviously a big reaction down here. Also fits in with those two lows. It's also the peak from this little consolidation before our last rally. So somewhere down at 23,500 seems like a likely area we could target fairly quickly if we take out the current level, which is around 24,150. Okay, switching gears to commodities. So gold breaking out obviously confirms a sort of risk-off mood out there. People selling off stocks, they're down at multi-month lows. Gold pushing out, breaking higher. So what am I trying to do here? Just to show you the general kind of context of what we're doing. Not really. So the rising trend line that we've been referencing for the last few weeks, months even, is holding, and so that's quite epic. I mean, if this holds, this rising trend line holds, and then we subsequently break above the 1365 or 1375 or 1400, whatever you're calling the top side up here, that's pretty much the next bull leg of the gold market kicking into gear if we can make that happen. So of course we could roll over again and drop below the rising trend line, but at the moment, you know, base case scenario is that that's not what's going to happen. We've had some confirmation last week with that break above 1237, and now we're just pulling back, and potentially this little pullback just an opportunity to buy the dip in what looks like a decent uptrend. So short-term two levels would just be this little spike high. This was something of a pennant that we were talking about. I posted it on TradingView actually, and so potentially just the broken pennant top if we get a further extension, or just that big 1237 level. Somewhere, obviously it's a large zone, you just got to either wait for your confirmations or pick your levels somewhere in there, in the expectation that gold keeps going. If 1237 gives way, then this was obviously the previous consolidation, the previous resistance down here at 1228. So potentially another drop down to there before then another leg higher. So watch out for just your opportunities somewhere leading into 1228 for gold to leg up again. The oil market. So this is Brent, so 58 being the key level. In terms of round numbers, US crude a bit better because it's the 50 level that we've been holding. But you can see why. This was basically the peak of the consolidation that we had after we put in the low in 2015. We kind of rallied all the way up here, consolidated, and then it was only obviously, what was that, 2017, I think, where we managed to break to the top side and properly rally in oil, and obviously just the price has cratered since. So a good chance that 58 provides a decent buying area for gold, but obviously the fact that the market has just collapsed into the level means that the rebound may not go too far, because people are going to be pretty nervous about holding on to it after such a weak period. So what we're looking at now is if we go down to the short term, we've failed at this level. We're coming back and testing these previous little peaks down here. So if we can get some bullish confirmation off down here, maybe that's the first step towards taking out these highs. And if we can take out this 63 level, thereabouts, which is what stopped us in the last three rebounds. Then potentially we're going up to test this last fairly significant peak up here, which is more like 68. Something like that. But then it's a good chance we roll over from 68 and take out the lows again, because as I said, market looking very soft, almost reminiscent of when the market, when it completely fell off a cliff here. We had one little positive week and then just rolled over dramatically again. Everyone would have thought after that, that this was the beginnings of the bottom, but no, it wasn't. We almost did another same leg of it down again. That was obviously in 2014 where the real bear market kicked in, but oil does have form on this front. Even here, we've got a positive week. We didn't get much beyond it and eventually legged down again. So that's why I think either 63, where we currently are, is the peak and we roll over again, or maybe we can get a bit more legs out of it and get up to 68. But even that will probably mean that we probably be the end of it and we roll over again. And last but not least, let's just quickly look at Bitcoin. So this is the big 6,000 level that got taken out, and obviously the price has cratered since. And then just on the short term, we're looking to see maybe this declining trend line through these peaks here. Maybe we get a pop above it, but I personally don't think that we get much above basically 4,100, because if you look at the sort of when we had that real calamitous period. Here was the first. People had their stops probably under here if they were imagining this was the bottom. Those stops got taken out, and then again we had a drop, and then these little highs got taken out in a similar area, and people were hoping that to buy this move up here, but that never materialized. So again, if we get up to there again, there's going to be people who probably were holding on to losses through this period who are just going to want to sell out at break even if they were trying to pick the bottom before. So I think the psychology of this looks still pretty bearish, but this pop out of this trend line potentially could be decent up to that 40100 level. But overall, probably the trend is down, and your best bet is following the bearish trend. And at the moment, 3,500 being the round number, and that previous low there, we've moved up to it. If we fill the gap, then we could just drop straight down to 3,000 again. And if for those who are interested, Jeremy Corbyn, the leader of the Labour Party, has just confirmed that the UK government delays the Brexit vote. So there we go. So let's have a little quick look what's going on with sterling. Still just about clinging on to that 126.70 level. To me, I don't necessarily see why delaying the vote is a negative. It doesn't particularly change anything, it just delays things. So obviously a greater period of uncertainty ahead, but no meaningful change really, other than the fact that we don't have a Brexit deal that anyone wants, but that's been known for a while. Okay, thank you very much for watching, everyone. Good luck with trading for the rest of the week. It's Jasper signing out.